Inflation data out this morning, always hotly anticipated, although it was sort of hinted at or included in the larger first quarter GDP numbers earlier in the week. PCE, which is the preferred inflation gauge of the Fed. Our Brian Cheung, of course, watching that very closely. If you look at the core, it's creeping closer to that 2% target.
Well, I was actually going to say, do you hear that knocking on the door? I think that's actually inflation that's right outside. We got some new data from the Bureau of Economic Analysis showing that inflation did increase by 0.4% in March. That's when you exclude those volatile pricing components like food and energy, which means that on a year-over-year basis, it clocked in at 1.8%. That is a pandemic high. The last time we saw a core PCE reading that high was in February of 2020, right before the crisis. And there's reason to think that the figures that we got from the BEA will point to inflation rising even further from that point. And that's because you look at personal income numbers up 21%. On a disposable personal income basis, that was up almost 24%. And the savings rate was up by 27.6%, which means that people have more money. They've been pocketing more money, which means they could be set up for a very aggressive spending cycle in the next few months, which means that inflation could go above that 2% reading. For the Federal Reserve's part, they've been saying, don't panic just yet. We'll be patient with our policy, but be ready if those inflation readings do show some of those effects, guys.
All right, Brian, so we'd like to focus here on the Federal Reserve, on the state of the U.S. economy. We just saw the graphic there on the board, some data out of Europe this morning, giving us a read on the state of that recovery, or rather lack thereof. And the question thus becomes, at least the way the pink sheets are framing it over at the FT, is this indeed a double dip recession?
Yeah, well, very different story that we're seeing in the Euro area compared to the GDP numbers that we saw in the United States yesterday in the morning, but GDP contracting by 0.6% on a seasonally adjusted basis compared to the previous quarter. And when you consider that in the previous quarter, there was another contraction that was 0.7% in that quarter, which means that we have back-to-back quarters of GDP contraction in the Euro area. Portugal and Germany were among the worst contractions that we saw in that area, but some countries did eke out growth when you look at Belgium and France, for example. But obviously, we've been hearing all these stories of renewed lockdowns in portions of Europe as some of the variants continue to pose risks, and especially with their vaccine rollout happening a bit slower than it's happening here in the United States. So that appears to be hampering their ability to recover from the crisis, at least so far. But very interesting kind of trends to watch over on the other side of the pond.
Brian, I heard a knock on the door. I thought you were going to pull in Jay Powell to this interview.
Yeah, actually, he just texted me. He said he's on the way. But I don't know, we'll see what he has to say. He is scheduled to speak next Monday, so we'll have the eyes on that with regards to inflation.
He's coming to talk to you about Doge. He's doing some follow-up commentary on that. Brian, thank you so much. Appreciate it.